Good morning, everybody. Welcome to our Friday show here at the Investing Bros. It is January 20th, and this is the final show of the week, but let's make it a great one. As you can see in that title, we're going to be talking about Bitcoin's price because when you're looking at the charts, a breakout should be coming soon. Over the last 6 days, we've been trading in this very small range of like $1,000. And so, yes, it's been exciting. We've had some news, but in terms of price and volatility for the traders out there, nothing is really happening, but that is all about to change. The question, though, is will it be a continuation to the upside like some people are predicting, or will we get that pullback and potentially form that inverse head and shoulders pattern we have been talking about all week here on this channel? Make sure you stay tuned for the entire show to learn more about that. We also got some big stories because the United States is now sitting at an all-time high in debt. Shocker. With all the spending we do, it's absolutely crazy. Just one more reason why you should be investing into Bitcoin, but we're going to cover that story and a lot more. Also, the European Union is believing that their inflation is about to get worse as China begins to reopen their economy after, I'm not really sure if we're allowed to say that word, so I'm going to say pandemic still.
Yeah.
The old C word. But China looks to be opening back up, but the European Union has some concerns about that. So we'll be discussing that in the second half hour of the show. If you guys are excited for this Friday and you want to keep it positive on the last show of the week, go ahead and smash that like button. That's that four-fingered mitten. If you guys are newer here, we've analyzed this button now for a while. And there's absolutely no way that has more than four fingers on that hand. That is a very thin palm. And so for that reason, I do believe that mitten was deformed at the beginning. But if it is still looking gray on your computer, go ahead and turn that one white so we can get going. We got almost 30 people here. Just got a super chat, though, from Eric Wallen. I almost forgot super chats.
Hey, there you go.
For a little bit. Saying, this just in, Bitcoin doesn't care about Genesis. Boom sauce. That's a great way to put that there. If you guys want to support our channel anyway, we just got monetized last week, so that's super cool. We're 1 week monetized now.
That's right.
And ooh, you're loud.
Yeah,
You're
I am
very
loud. I don't know why.
That's nice for my ears, though.
There we go.
Speaking of that loud person, I am joined by T Shroom across the desk from me. How are you doing this morning, T Shroom?
I'm doing really loud. My vocal cords are overpowered this morning.
Yeah.
And I really do want to thank Eric Wallen for that super chat. Those super chats are extremely, extremely awesome. And he said, Bitcoin doesn't care about your Genesis. I want to read that as if it's that meme. I don't care that you broke your elbow.
Yeah,
I like that. Bitcoin does not care about Genesis. It doesn't care about anything. It is a currency that is raging forward. We'll tell him I got a really good quote. And I didn't let Tim see this quote yet.
No, he wouldn't let me see it.
This is Tim getting to see it for the first time, too. Just a little backstory. The person who said this quote is Ben Graham. And Ben Graham was the one who wrote the book that I do not know the name of, but it is the book that Warren Buffett read for the first time that kind of sparked his interest in investing and set the course for one of the greatest investors of all time, Warren Buffett. So let's take a look at that quote right now. Investors should purchase stocks like they purchase groceries, not like they purchase perfume. Tim, what are your initial thoughts? What's your reaction?
Well, I never purchase perfume, so I agree with this 100%, because if you purchase it the way I purchase perfume, you would never buy stocks or crypto. We're gonna add in crypto, just throw it in there. Yeah. Weekly, I buy groceries weekly, so buy stocks weekly. I got you. It sounds like Ben's a good fan of a classic DCA strategy, is what I'm kind of getting at here.
When I'm at the grocery store, I spend a lot of time looking at especially Walmart. They have the price per ounce or whatever.
Yeah.
I do that. If I'm looking at rice, or if I'm looking at cereal, or if I'm looking at whatever I'm looking at, sausage, I always look at that price per ounce. And you never do that when you're looking for high luxury things.
Yeah.
When you're looking for things like perfume or cologne, you're thinking about it's almost like a romantic encounter with this product that you're about to buy and bring into your identity. But if you're just going out and buying some sausage for the week, that's not part of your identity, right? So you just want it low, and you want it cheap, and you want it to work. And so I think that's a really good thing, especially with a company like Tesla. Right, that's a great example in our contemporary period. Is that people fell in love with Tesla, right? And it's not necessary. It wasn't necessary. It was overvalued, right? It was kind of in its perfume stage. Now, you could probably make the argument that it's getting closer to more of its grocery stage, where it's it's priced a little bit more appropriately.
Yeah.
And anyway, so wise words there from Ben Graham.
It goes deeper. I mean, Kelly Kellum just put in chat. By the way, shout out to Kelly Kellum, who's going to be joining us next Wednesday on our what are we calling it now? Something guest Wednesdays. I don't know. I have the name somewhere, but I don't know what it's called right now. That was anticlimactic. He says it also refers to buying things that are needed, not things that are wanted. And then I also thought about it, treat it like a grocery store shop. Well, how about you guys? When I go into a grocery store, I always keep my eyes out for those red stickers, which are the deals.
That's right.
Buy one, get one free, 50% off.
Yeah.
So that quote, it went deeper.
Yeah.
It's like an onion. The
That's
more
right.
layers you peel back, the greater it gets.
Exactly.
I don't know if that's actually how an onion works. It just has layers. I don't know if it gets better into the middle.
It sounds like we know what Tim buys at the grocery store.
Onions? Yeah, well, not in a while, but we did get another super chat from Army Piper saying peace, love, and trading. Absolutely.
Gotta love it.
We agree. Well, before we jump in here, we're going to read some of the names in chat. Go ahead and smash that mitten button, that like button. T-shirt, what are some other headlines we're going to be covering in that second half hour of the show today?
Let me get to that right now. Today we're going to be covering the U.S. national debt has reached this amount of trillion, and it's going to shock you. And then we're going to get into some stuff on the European Central Bank. Lagarde says that China's COVID reopening will push inflation higher. Kind of see both sides of the story there because not everybody agrees. Fed Governor Lael Brainard sees high rates ahead even with progress on inflation. So issuing a warning, and I think that's going to be the tone up until February 1st when we get that Fed decision. Nexo settles with the SEC, will pay $45 million and kill crypto lending project. That's pretty big news. That's precedent setting, I believe, for the crypto industry in the U.S. And then Genesis is kind of the cover story, but we all knew it was going to happen, has officially filed for bankruptcy. And then Google's parent company, Alphabet, if you didn't know, Google is owned by a parent company now. They kind of just spun out their own parent company, but it's laying off 12,000 employees.
Yeah.
And then also we'll do a post-mortem on Genesis now that it has officially filed and see what its debtors are looking to get back and how much they are owed by the lending platform. So
it's gonna be some juicy content there in that second half hour.
I agree with that, Tim.
Well, maybe we might have to run long today to get all that out there. Let's go ahead and check in with chat. Man, we just got another, holy cow, a $50 super chat from Army Piper. Tim and T, buy some steaks tonight and enjoy. Love you guys.
Wow.
Ooh.
Thank you so much.
We could even get probably a dozen eggs with that super chat.
Yeah.
So, goodness gracious. Generous. Thank you so much, Army Piper. If you guys don't follow him, by the way, shout out to him as well. He hosts a show over on Charts Prime YouTube channel. So go show him some love and support. We've been on there a couple times. I'm looking forward to getting him on our show as well here very soon, but wanted to show him love. And thank you for that donation, my friend. Let's go ahead and read some of the names of people in chat this morning.
Let's do it.
Our first person in chat, Mr. J, is here saying, Happy Friday, all. Shout out to you, Mr. J. I see you have not changed your name to confuse me just yet, but I'm looking forward to the challenge. Just make sure I can still identify it's you, just to slip me up. V Slim is here saying, Hola. Brian Hoskins comes in third. I know he's really trying to get to be the first one. Maybe one of these days, Brian, maybe I'll slip you a cue like, hey, we're going live in 5 seconds, and then he can get in there. Cryptex, one of our moderators, is here this morning. Shout out to him. Here to learn. Another Hokie is here. Yair Navarro, Mr. Bitcoin. I loved what he said. He said, I don't invest in Bitcoin. I divest out of fiat.
Nice.
I completely agree with that. Justin Eubanks is here. Henry C. Hernandez. Crypto Trades. Taylor Warren is here.
Oh, wow.
Ooh, I think she's going to be making a smoothie here in a second. She warned me. She said if anyone hears the loud noise, she's about to be making a smoothie before she heads back to work. She had a little bit of a break. Eric Wallen is here. Crypto Set Guy, another moderator. We already shouted him out, but the great Kelly Kellum is in chat.
Kelly Kellum.
Servando Estrada.
Servando
Estrada. Donero Cabrera is here.
Like
Donato or Donato? Tell me which one it is. Charlotte is here.
Donato.
Kasha Katz. Let's see who else. I saw other names. Gia S is here. Mitch Shaw. Max PP. Elo Brown. Steve B is here. Ryan McEachern, also known as Sir Swifty. He is a guy that I've gone back with for a couple of months now. Love seeing him here in chat. Thank you for reminding me your name is Sir Swifty, though. Good to see you here. Biviak?
Biviak?
One of them. Josh Denham, Al Bundles, Crypto Mini Bike. Let's see. I think that is about it. Dan is here. Thank you, Dan, for being here. Let's go ahead and jump into the Bitcoin charts. Shout out to all of you guys. If you have not smashed that like button already, go ahead and do it. We got over 60 people watching with only 42 likes, which means 21 of you, at least, probably more, though, have not smashed that like button just yet. Go ahead and do it. We're going to jump into this question right here, or the statement that was kind of put in the title and the thumbnail. Bitcoin breakout, is it coming? Which way are we going? It should be, because as you guys can see here on the daily chart, it doesn't look significant, but that's 6 days we've just been kind of hovering in this almost $1,000 range. Yes, we had a wick come down to 20,400, but in reality, we've kind of more stayed. These lows have gotten towards 20,600, and our peaks have been here at 21,600. So while it's been exciting, being is that we've spent a lot of time down here below 20,000, even below 18,000 really, but we kind of have started to slowly get boring. The question is, are we going to keep going sideways, or is a breakout coming? We've discussed this now for a while. There are some signs to the upside. There are signs to the downside. Let's pull up some of those. First of all, we are massively overextended on the RSI here on the daily chart. We touched 89 here on the RSI, which doesn't happen that often. We went back and showed you guys in the history of price action, when this has happened. It happened during our bull market run. We took a little bit of a break here in January. Let's see, was that timeline? Yes. January of that bull run in 2021, we took a little bit of a break, took a 30% dip, but then we continued that bull run. Then we went back up here to where we were resuming the bull market back in 2019. We actually touched it 3 different times on our way up. The third one did give us a reversal where we dipped back down. I'm not really certain necessarily how far we needed to go down, though. The pandemic kind of threw a lot of information off there, but we did take a little bit of a dip after that. So for those reasons, just historically looking at how overextended we are, whether it happens here very soon or later, more than likely we will see a dip to the downside. I'm still in the camp of it happening first, and the reason why is because I really love to see that right shoulder forms for the inverse head and shoulders pattern. But we're going to take a other couple looks here at some other indicators saying it's time to go down. Our Luxembourg oscillator is also flashing. Overbought. It's got that red cloud coming in. We're way overextended on that one as well. So 2 different oscillators already saying, hey guys, it's time for Bitcoin to cool off just a little bit. But let's go down and look at the 4-hourly chart and see what is happening down here. Now, I told you guys we actually had our bearish divergence form on the 4-hourly chart, even though we haven't had it technically form on the daily chart. That's something I do want to see. Let me go back to the daily chart really quickly here. Just keep. You good? Okay. T-Stream's got to leave the room, I think. So we have not yet had our tops here where the price action goes to the upside and the RSI stays down, the peaks go down. A lot of people look at this point right here and say, Tim, isn't this bearish divergence right there? And you could say it is. I absolutely would understand and respect anyone who says that they want to use this point and this point. The problem is, though, is that same point can be utilized over here with September, and this would have been the bearish divergence that also helps send us down during that FTX shabacle. So kind of different camps. I'm waiting for another one to develop here, in which case we're going to see the RSI come a little farther down, I believe, back below 70, and then have a peak down the road where we do not get back up to 89. In that same timeline, the price, again, I would love to see us come down to this region, and then we actually go higher, but we set up our bearish RSI divergence. We'll go back to the daily chart and show you another thing here in just a second as to why I think that could happen, and a level not only from this box that I've shown you, but a level with the SMAs to keep your eyes on as well. Oop, I did not get off my marker. But let's go back down to the 4-hourly chart and check out what's happening down here. So we got our bearish divergence. The price actually started to fall. The prices kept rallying. Now we came down here and we just tested the 50. So this absolutely could be a level of support in the 4-hourly chart that we find some support on. But I'm looking at the Luxembourg oscillator and we're sitting right here in the middle, and they're not necessarily done. I would not be surprised to see us continue to the downside here, actually get overextended on the RSI and the 4-hourly chart. So we actually end up coming back down here, maybe towards the 30. Let me grab this marker. And then we finally find our support in this region down here in this box. And then we are able to rally to the upside and get back to being overbought over here. And then we'll find out what dips when we get to that point. My point on the 4-hourly chart, especially when we pull up our Lux Algo, we're going to see a lot of different signs starting to claim, hey, it might be time to reverse. Actually, this one's a sign. The Lux Algo on the 4-hour chart is another one sitting right in the middle saying we could go to the upside or the downside. Notice that we did get overextended on our Lux Algo indicator. We went actually above this reversal band, and now we're working back into it. Now we're squarely between it. But let's go back out to that daily chart and take a look as to why I think this breakout is actually going to be to the downside. Now, right here, this is our reversal zone. I just showed you guys the 4-hourly chart, but daily chart, this is very significant. Yes, we are under a sell signal on our, this is our contrarian signal. So if you guys go into settings and look at signal mode, I'm a fan of contrarian signal. It gives you it a little bit early. It kind of lets you know, hey, be prepared for something to be changing. But if you were to go just use your normal confirmations on Lux Algo, we just had a take profit on a buy signal we had all the way back here in December. And we're sitting overextended on the oscillator, as well as, let me go and put my, oscillator. We're sitting overextended on Lux Algo, and we pull up our Bollinger Bands. We're also got a little overextended here the other day on the Bollinger Bands. And this is a classic sign of being overextended on Bollinger Bands, being overextended on the Lux Algo indicator itself, and then you pull up the oscillator and we're overextended on the oscillator. These are great tools if you're looking for a weapon to be able to trade and know when to take profit and when to short, when to long. When you see us get overextended on the Bollinger Bands, overextended on Lux Algo, and overextended on the oscillator, that is a great trifecta of saying, it looks like a great time to go ahead and reverse and come back down to the downside. Yes, the 4-hourly chart gives us a picture of saying potentially we could go back to the upside, but when I'm looking at the daily chart and the 4-hourly chart, I'm saying there's more of a sign that potentially we're coming to the downside, maybe even get this green reversal zone to match us up towards this $19,000 level, and then we're able to reverse. Another reason why I'm a big fan of saying that I think we're going to be reversing and going to the downside, but a breakout is coming, is actually when we pull up, you guys are seeing me get to play with this chart a lot, Bollinger Bands on the 4-hourly chart. Yes, on the daily chart, we have been massively overextended, but we're starting to pull back down. But on the 4-hourly chart, we're back in a zone of where we're constricting on the Bollinger Bands. And you guys know, we've talked about this before. When you constrict in Bollinger Bands, it's only a matter of time before a breakout comes. Now, that's not a great shot right there, because in this case, the Bollinger Bands kind of stayed constricted for a while. Even though we broke out to the downside here late December, they didn't really get that far spread out. They kind of stayed constricted. On the daily chart, though, you can see a better opportunity where we were constricted right here. This was actually one of the most constricted areas in the daily chart Bitcoin we'd had in years. And then we saw a massive breakout with some big volatility coming into space. I am not expecting us to come down to the bottom of the Bollinger Bands, but I do think potentially coming to the 20, and maybe even when we pull up the SMAs, coming down back towards the 200 makes a lot of sense. And for those reasons, when I'm looking at this breakout, when I'm looking at the 4-hour constrictions, and I'm looking at the Lux Algo indicator, and I'm looking at all these indications, I think a breakout is coming, and it's to the downside. But you guys know that is a good thing. We've talked about that now for a while. A breakout to the downside would give us that right shoulder for the inverse head and shoulders pattern. Let me go ahead and draw it for you guys just in case you are new here and you don't know what we're talking about. This zone right here, 19,000 to 19,600, is a nice fat zone on our fixed range volume profile. If we were to come back down here and then move to the upside, we would officially have our left shoulder, wow, drew that terribly, our left shoulder, our head, and then a right shoulder. This would give us a prediction and a breakout for Bitcoin all the way up towards almost $28,000, but I think it stays within the $27,000 mode. Let me just pull this over and show you guys over to the breakout. Yes, this would give us a price prediction all the way up towards $27,400. So I'm going to pause right there, just give myself a little bit of a breath. This is super bullish, but it does mean we need to have a bearish breakout first. So when we're talking about a breakout coming, I still think there's either way, whether we break out to the upside or the downside, both are bullish. My fear, though, if we break to the upside, it gives a lot of validity to something that we've talked about before. If we don't come down here and set this new right shoulder and then give ourselves a chance for a massive breakout, a regrouping, I think there's a decent chance what you guys end up seeing is, let me go ahead and get rid of all of my drawings here, is a price action that stalls out lower than 25,000. And what I'm looking at here is potentially the price will come up here towards 28 rather than 25. We get stuck somewhere down here. I say 28. I'm at 23. 23. And then instead of actually continuing to the upside, we get ourselves some massive bearish RSI divergence. Let me go ahead and pull up our RSI again, where now we're talking about we have our bearish divergence right here. Let me go ahead and show this for you guys. We come down here, we set up our bearish divergence on the daily chart, but we go out to the weekly chart, and now what we're talking about happening. Gotta get away from my marker here. Thank you. Now we're talking about we did not get back up to our peak right here back in, what is this, August of 2022, where we went all the way up to 25,000, but we are way higher on the RSI. This to me would be the bearish divergence that would send us down to a new low. Again, I've told you guys several times now, and it turns out that I'm not the only one in this camp. A lot of other technical analysts agree with me. 25,000, getting above 25,000 would be close to confirmation that the bottom for Bitcoin is in. If we start setting higher highs right here, rather than setting lower highs, we could cancel out and say, all right, we got above 25,000. It's time to more look to the upside or sideways. But getting this bearish divergence where we only come up to about 23.3, 23.4, give or take, and we set up that new bearish divergence, that could be what sends us back down towards 14,000. Or again, it's still possible, especially with some bearish news, to get down even lower than that. I'm keeping my eyes around the $14,000 region, but that's up to every single one of you guys. Let me know what you guys think in chat. I would almost rather see us go ahead and set this right shoulder. Let's take a short-term dip. Let's regroup. Let the bulls get some more strength to them, and then see a breakout come later that takes us above 25. Then to just keep moving bullish right now, possibly get stuck right here in the mid $23,000 levels, and then see a lower price down the road. Let me know what you guys think there. Either way, breakout is coming. I'm a fan of moving to the downside first because I do think that could bring some better bullish action down the road. Let's go ahead and move on, though, and take a look at some other charts because it's not just all about Bitcoin. Again, I am expecting us to go down to the downside almost the entire crypto market because of a lot of those indicators I just showed you. But let's look at some others as well. Let's take a look at Ethereum. Still hovering, same as the other day, with its former level of support turned resistance. It's kind of sitting there still. We broke above it very temporarily, but I'm still looking at this and saying, all right, we need to claim this level even more so to firmly say it's back support. More than likely, again, that dip I'm talking about with Bitcoin, I'm going to see Ethereum more than likely come back down to this lower level. I don't think we're necessarily coming all the way back down to this flat level of resistance we struggled with back here for a couple of weeks around 13,470. I think a realistic price for Ethereum to drop back down to find support is sitting right here in the mid 1400s, about 1458 give or take. And then we have another move to the upside for Ethereum itself as well. Keep your eyes on a couple different levels here with Ethereum. We already matched that $1,600 prediction I called for back here. But watch as we begin to wrestle with some of these other peaks we've had. You know, I think 1674, even all the way up to 1700 are very interesting areas to keep your eyes on here with Ethereum. So we'll keep you posted on what's happening there. More than likely next week, I'll be making another Ethereum technical analysis video where I'll go more in depth. So make sure you stay tuned for that. Let's check out Cardano and see what it is doing. Kind of the same story going on. We actually dropped a little bit lower with our RSI here on Cardano, so that's a good sign. But same thing, we had a bullish candle yesterday. I still think we're coming down to retest this lower level of former resistance. Just like I said, Bitcoin and Ethereum, I think they're going to fall. I think they're a little overextended. Same things are showing on the Cardano chart. Watch for us to potentially fall back below 32 cents. Go back down towards 31, maybe even dip in below 31, down towards 30, and then we find this former resistance turning into support, and then we go ahead and rally back to new highs. This is another one we talked about yesterday, but I'm just going to keep you guys up to speed. I don't see this 49-cent prediction happening before the end of January. For those of you who missed that, we had a prediction from the Cardano community here a couple of weeks ago saying they believe January 31st we're going to be sitting at 49 cents. I still think that's just a little too early. However, what I do see in the cards is a 56-cent Cardano, and that's the target I'm looking for probably sometime either mid to late February, if not early March, before another big dip comes in. So you guys see right there, we have our falling wedge pattern on Cardano. That's what's coming up towards 57, 56 cents. I guess what I would do is I'd move it down there to this potential breakout. There we go, 55, 56 cents. That's my price prediction for Cardano. I think we're going to see here in Q1. And I'm going to continue to update myself. I've gone on record as saying I think the end of Q1 is going to be a little bearish. I think we're going to start closing bearish. The question is, can we have a good enough rally to prevent new lows? or will we stay low? Will we not be able to hit some of these higher bullish predictions and we end up going down and setting new lows? Cardano is one of those. I told you guys can keep an eye out for 22 to 20 cents. Other people have called for all the way down to 15 cents. I'll show you guys why. I go to a different chart here for just a second, so give me some time. But if you pull up the Kraken chart, which is one of the ones that has longer data on Cardano, and you go back all the way to some of these bear markets we have back here, there's a lot of significance below us, sitting closer towards 15 cents. Even that's fixed range volume profile. Let me pull up the log chart for this same thing, and I'll show you guys. These are some peaks that we hit back here in 2020. So this peak right here at 15 cents, all the way up to about 18 cents. I know a lot of traders who are waiting for those prices. Also, this scam wick we had right here that went down to 15 cents. A lot of traders have been waiting, so they missed out on this short-term rally. They're going to continue to hold out and say, I think that we can get back down to those levels. The question is going to be at this point, can Cardano get that big rally up towards 56 cents? In which case, the dip that is coming, either late quarter one, early quarter two, maybe even mid quarter two, it's only going to bring us back down maybe to 30 cents, 37 cents, somewhere in the region. We'll find new support. Let me know what you guys think about that. I'm a big fan, though. I still think Cardano is going to do some things that people are not expecting. I still think we're going to see a massive bullish breakout here with everything they're working on fundamentally. I think the whole crypto space still has a lot of bullish room ahead of it. The question is, what are the moves we make, and what are the things we set up on the charts, and how bad is some of this news like DCG? Of course, Genesis at this point is baked in, but we have not seen the full fallout for DCG just yet. Is that going to be enough to make the market go down at a significant level? And of course, there's also things we don't even know. We don't even know right now to think about it that could happen, that could crash the market. That's what we call a black swan event. You won't know it until it happens. Let's take a quick look. I got a couple minutes here before we switch over, and we're going to move into some news. Let's take a look at some other charts and see what they are doing. We got XRP kind of doing similar moves as the rest of the crypto market, but it's coming back into a zone I've had highlighted for a while now of a sideways trading zone here. We just hit resistance around that 40-cent level again. So keep your eyes here. We did have former resistance coming down. Watch if we fall, if we're going to come back down towards these levels around 35 cents. There's some big news coming out on XRP at the end of the month. So early February, we'll probably have a lot more information with the price action of XRP and a lot more information about what's happening with that lawsuit as well. So XRP at the moment, a little overextended, just like everything else coming to the downside. I think bearish scenario 32, but I don't think that we're really going to go down that far unless something majorly bearish comes into the XRP space. Let's look at a couple others. Atom has been one we've been talking about for a while. We didn't quite get back up to this level of resistance that was falling. We did come back up to a flat level we had highlighted here around $13.47. But we're finding a support. This is another zone again, been resistance, support, resistance. Hopefully we're turning this back into support. Worst case scenario, I'm hoping that we only fall back down here towards 11. We keep the bottom zone here as support, and then we're able to keep on rallying. So we'll keep you guys posted there. As far as the oscillator, similar to Cardano, it's a little bit more coming into, on the daily chart, it's a little bit more coming down to earth. It's not staying above that 70. So a chance on Atom potentially do something special, but I expect it to just kind of follow the rest of the space. Let's take a quick look at Matic here. Again, similar to XRP, kind of topped out at that zone that we've been in for a while, except for this little breakout here. Got overextended, but nowhere near as much as other projects. Like this one only got up to 76 here on Matic. So maybe Matic is going to be able to regroup a lot sooner and have bigger pushes than others as well. Let's look at Algo, another project that a lot of people have been excited about. Not necessarily anything to write home about, no formations or anything. I think the big thing to look at here is, can we get back up to where we had former support over here around 27 cents? What I'm looking for is a good push up towards that 27-cent region, especially with Algorand picking up some more relationships. I think this is going to be one of the bigger ones in the bull market, but shorter timeline, meaning next couple of weeks / month. Watch for former support to be turned back into resistance. I think that'd be a good place. If you guys are already in a long, or if you want to enter along anytime soon, it's going to be a good time to take resistance when we get back up to that level. I do expect us to reject there. Let's look at two, and then I'm going to go away. These are the two biggest movers in the last couple of weeks. Solana, of course, with all the terrible news, it got massively overextended, but then rallied over 200% from that low. It is sitting in a similar spot, but I think it's coming back down a little faster than the other projects. So, for example, let me go ahead and pull this up. I think that we're down now significantly. Yeah, 17% it's dips and reaching that little peak. Otherwise, Solana, though, sitting in the same spot. I think it's kind of settled for a minute. A lot of volatility, a lot of chaos, a lot of bearish candles here, but I think Solana's kind of settled in. Those who want to use it are using it. Those who don't want to use it or don't want to use it. Watch for Solana, though, potentially to be another coin because it's just so far overextended to the downside, despite the fact that a lot of people don't like it. If you're a trader and you just want a coin that has potential, I think Solana could be one that you could make some money on for a trade in short-term moves. We'll move to the last one that's been a big mover, Gala. Gala, of course, broke out of its falling wedge pattern, so let's see how much further it could go to the upside to fulfill that prediction because it's not quite there just yet. Watch potentially on Gala to get all the way back up towards 7 cents. I think we actually even talked about that. The article we talked about here a couple of weeks ago that predicted a 7-cent Gala. And sure enough, that's right where that prediction tool is. So keep your eyes on Gala as well. Another one, if you're in a trade or you're in a long, watch for 7 cents in the next couple of weeks to be a good spot to take some profit. That's all the technical analysis on altcoins we have for today, but hopefully that helps you guys and you guys continue to keep your eyes on the charts. Again, the purpose of me doing technical analysis is not to give you guys all your answers. I really hope people don't tune in to either our show or any other show and say, well, whatever Tim says or whatever this other technical analyst says, I'm just going to trade blindly based off of it. That is not the purpose of these charts. The purpose is as you guys are doing your own technical analysis and you had to watch somebody else do it, is that maybe I point out something you haven't seen before. Or maybe I work through and explain a certain concept to you guys that you guys haven't fully grasped yet. And it's part of your education to better use that tool so that you can trade for yourself. I'm not trying to give you guys any type of financial advice and saying, do it exactly the way I do it. I'm just showing you what I'm seeing, responding the way I respond to the charts, and hopefully that helps you guys out a whole lot. With that said, though, I've been speaking now for a while, and I need to take a drink. T-Shroom, anything you want to add to that or anything you want to move on to?
No, I thought that was really, really good. I'm ready to get into the market open because we need to zip through that to get over to the stories because they're thick over there, baby. Let's get into the charts here and just kind of survey the market as it's opening here in the early seconds of the New York session. You're seeing energy trading slightly higher here. U.S. oil not really figuring out exactly which way it wants to go. We'll take a look at that as it still has a chance at pushing up higher and breaking through this resistance here at 92.90. But ultimately it's going to come down to a couple of different macroeconomic forces, which we will get to in the stories. Natural gas. We did get Lux Algo switch green on the trend tracker there, the trend tracer, excuse me. But like Tim pointed out yesterday, it's not exactly where you'd want it to be in the Bollinger Bands to mark that bottom. And did the trend trace? It just turned red in real time.
I think it's the trend catcher. It's
yeah.
going back and forth. The reason I didn't like that is because, so what I was talking about earlier with the Bollinger Bands, I really like Lux Algo with the Bollinger Bands.
Mm-hmm.
But one of the things I'm looking at is, do we get overextended? So in this case, we're looking for it to cross below the bottom line of the Bollinger Bands, and we didn't see that. So could it reverse and go to the upside? It absolutely could. It hit its take profit, but it's not the strongest bottom signal I've seen. And so for those reasons, I'm not necessarily too certain that the bottom is in just yet. I think it could come back down and touch the reversal zone once again. So for that reason, that's why I was making that statement. It's like, let's not just get ahead of ourselves.
Yeah. Again, I was having issues with the Bollinger Band yesterday, but overall, you are starting to see what I'm convinced is the beginnings of the bottom of natural gas, but I don't think it's there yet.
I think that's a good way to put it. Beginnings of the bottoms.
Yeah, I think that there's still some room to fall. So we'll move on though. That's a good energy wrap up. Let's take a look here at our indexes opening up green across the board, except the Dow. It's still in the red, but not by much. Could potentially be seeing a rotation out of risk, out of security into risk a little bit today, especially because the NASDAQ is leading. But again, guys, this is the early minutes of the session, so we don't want to get too carried away here with assumptions. Crypto, pretty mixed. Let's see, Binance leading the way down and Atom leading the way up today, at least on my watch list. Let's keep moving though. Metals, green. Pretty much, silver's green, gold's not. We'll keep moving. Big cap tech, pretty mixed. Google having a pretty decent day. Let's check out their chart really quick. We almost never look at Google. Look at that. Nice big gap. This is the daily chart, guys. Nice big gap up. And we will get to exactly why that happened today we know exactly. Well, I read it in the intro. They have a bunch of layoffs. And in case you didn't know, or you're new to markets, you're new to equities, excuse me, you've been in crypto. Whenever a company lays off, that boosts their stock price because they've just lowered cost. You know, the $78,000 to $120,000 a year that they're spending on per employee just went out the window, and they can recoup that, and that gets passed on to the shareholder price. All right, looking here at the yields on the bonds, they are up today. So getting some continued cycling out of bonds. We talked about that at length yesterday, kind of the logic behind there. The Dixie making a little bit of a green candlestick up higher today, but overall in a pretty downward trend. And Tim and I have covered that at length, so we'll just keep right on moving. Cannabis opening up slightly green today. Mid-cap stocks, pretty green. DraftKings leading the way there. I say mid-cap stocks. This is by no means comprehensive. And then you also get your oil producers coming and clocking in red, except for Occidental Petroleum trading up a little bit green today. But you do. So
I told you about DraftKings. As the playoffs get close, people are just going to be going crazy over there.
They're going to be going bonkers.
Yeah, I mean, non-financial advice, but I would expect that to continue to climb as we get closer towards Super Bowl. That it's going to be a great time to take profit right there, probably Super Bowl week. Because of course, then it's over, and
it depends.
It's gonna be a little bit before basketball hits its real stride with playoffs. So
you got to be careful with the betting stocks though, because they are not correlative of sports cycles. I wouldn't say they're more correlative of the regulatory cycle and what states they're approved in and stuff like that. And then also
a lot of money though is
discretionary
changing right now. A lot of people are betting on these playoff games.
Oh, really?
So there's a lot of money coming. Yeah,
a lot of fees.
It's just the playoffs. It's where people start to really pay attention.
Yeah.
There's a reason why even some of these stocks we saw go up during the World Cup, just because the amount of attention going on over there. There are certain cryptos, other stocks that they'll only be affected based off of adoption and when a new regulatory statement comes in. But this is one, in my opinion at least, I think it goes up during these times because there's just a massive amount of money.
Yeah.
I don't know. I'm a sports guy, so when I flip through social media, the other thing that people love to see is who won and who lost bets.
Yeah.
Like there's a guy who won like over $1 million with like an $11,000 input just because it was a parlay of times that he called everything exactly right.
Yeah.
There's been people who've lost money because they were so close and lost just one of their little things. So that was a long sports thing just to say, hey, if you're investing right now, again, non-financial advice, but take a look at some of the sports betting sites because things are getting really heated over there for the next couple of weeks.
Yeah, that's right. I can't remember the name of it. Yeah, we'll leave it at that. We'll keep moving, guys. Check this out. So the Fear and Greed Index is actually coming in neutral today. So it's been bouncing back and forth, and we've been tracking it because it has been getting some action here. It may be able to break out of the 50s here and move up. That'd be really exciting to see it back in 60 territory. We haven't seen that in a long time, or even 55. But so that's the Fear and Greed Index. And let's go ahead and get into our stories here. The U.S. national debt has reached an all-time high of $31.41 trillion. Let's take a look at the debt clock if you've never seen this before. So this article even now is out of date because it's already up to 31.5. If you've never seen this before, it's pretty cool. usdebtclock.org. You can see all the different. So you can see the defense war spending. You can see the U.S. debt per citizen. This is how much people would have to pay per citizen to pay off the debt, which may not seem like that much, to be honest with you. Per citizen, it's $94,000 per person would need to hand over to Uncle Sam to pay off the debts to themselves. I don't know the perverse irony of that. And then per taxpayer is higher because there's less taxpayers than there are citizens somehow. All right, moving on. You can also see the debt to GDP ratio here, and this is a little out of date because you get a forecast here at the end. But check this out, guys. Since the end of World War II, we have never had 100% debt to GDP ratio. World War II, you could argue it was justified because we had to go over there and kill all the Nazis and all the other fascist regimes around the world, and that wasn't cheap. But we paid it all back off, and by the 1970s, we were back in the mid 30s, which is kind of comfortable place to be for a debt to GDP ratio. But now, after 2008 housing crisis and the global pandemic, we have worked our way right back up to not only 100, but and this is like I said, this is an out of date number, but it's in the realm of 120% debt to GDP. Well, if that's not comforting enough, guys, let's hear from some folks from across the pond. European Central Bank Lagarde, she is the equivalent of our Jerome Powell, and she says that China's COVID reopening will actually push inflation higher. So let's see what other people are saying, and let's see what she said. So on one hand, some argue that because supply chains are being restored, then the reopening might ease some of the inflationary pressures that Europe has faced in recent months. On the other hand, others note that China will be consuming more energy, and this will add to ongoing inflationary pressures. President Christine Lagarde, chief of the Eurozone Central Bank, is among the latter group. Let's see what she has to say on the issue. China's reopening is something that will be a positive for China mostly, something that will be a positive for the rest of the world, but we will have inflationary pressure on many of us, simply because the level of energy that was consumed by China last year was certainly less than what will be consumed this year. The amount of LNG, that's natural gas, that they will be buying from the rest of the world will be higher than what we have seen, and there is not so much spare capacity in terms of oil and gas, Lagarde said. She also, and then it's pointed out from CNBC that December inflation in the EU was 9.2% for December, and that's for the Eurozone. So, and it was a second consecutive monthly drop in prices, which is good overall. Yeah, ultimately, you know, what she's kind of weighing in here on what could potentially happen as China reopens, which is pretty much one of the biggest macroeconomic issues right now, maybe other than the Russian and Ukraine war.
Well, and it'll affect everyone, because what she's getting at here when I was skimming this article is that the extra demand from China as they reopen back up is going to cause energy prices in general to go up, because the demand is going to go up, obviously. And so, as the United States is looking downwards, and I think that's one of the stories we're going to be talking about is the United States inflation. Now, it's looking more positive, even though we're going to continue to raise those rates. It's another thing to keep your eyes on as China opens up. Good for crypto as China will open up and do stuff. But in terms of inflation and energy costs, could have some bearish signals going on.
Yeah, and we covered energy costs already this morning, but I did want to show one thing that I noticed on the LNG charts, the natural gas charts, was that there's a giant bull cross about to happen here as the red histograms have decelerated considerably in the last couple weeks here, last couple days. So, you know, this has been a monumental drop. I think it was like something like 60% almost. Yeah. So 51, 52% drop here. And that's just since around December, since around early December. Going back, you can see it was much more of a drop if you go all the way back to November, the November highs. And that does get you to 60, almost 60%. So it's been a long time coming, and this is ultimately represented in China cooling down, and also the astronomy. If you zoom out to like more of a longer term view of natural gas prices, you can see here that there was a lot more going on around the world. It was really the European issue when Russia invaded Ukraine that sent natural gas prices up 260%. So you could kind of also interpret this as an overcorrection to the downside potentially because of how over accelerated the price got to the upside. So and also while we're here, you can notice that the point of control here for the fixed range is 1050, which where are we trading at today? 1070. So is that the bottom? You know, it's another thing that's contributing to my thesis that we are getting close to the bottom. Let's take a look here at exactly what Tim was just mentioning. Fed Governor Lael Brainard, she's pictured just right here on CNBC.
Behind Watch Now. There we go.
And that Watch Now little icon is just helping us.
Great nose and mouth.
Really helping us out there. She does. But she sees high rates ahead, even with progress on inflation. So let's read more of the details here. There's a good picture of her right there. One of the governors for the Federal Reserve. So even with the recession moderation, inflation remains high. And policy... What?
Well, let's regroup.
Yeah.
Let's start from the beginning.
I see the mistake that I made.
Yeah.
Even with the recent moderation, inflation remains high, and policy will need to be sufficiently restrictive for some time to make sure inflation returns to 2% on a sustained basis. She said these remarks at a speech in Chicago. That's awesome.
Yeah,
it's great to know where she said
has
it.
been more hawkish, and I mean that in a good way. Mm-hmm. She's been one of the voices of reasons. Like even earlier in the year 2022, I remember her name because as Jerome Powell was being very dovish and everyone's like, oh, we're going to be good with a soft landing. She was one of the voices saying, hey, this is worse than we think. We need to be more aggressive. So, just even though she's kind of not saying what people want to hear right now, I feel like she's one of the few people in the Fed that is saying what needs to be said rather than what people want to hear.
Mm-hmm.
So,
yeah, no, you're completely right, Tim. But moving back into the details here, she noted weaker numbers recently in retail sales and wages and expressed doubt that the economy is seeing a 1970s-style wage price spiral where higher earnings keep pushing prices higher and vice versa. So not as bad as the 70s, but together the price trends in core goods and non-housing services, the tentative indications of some decelerating in wages, the evidence of anchored expectations, and the scope for margin compression may provide some reassurance that we are not currently experiencing a 1970s-style wage price spiral. So a big mouthful there, guys, but just providing more support for the fact that this is not the 1970s, and it's not going to be as extreme as back then. I believe that's when unemployment got up into 20%, which was pretty crazy. It was either that or it was in the 80s. I can't remember exactly, but inflation is high and it will take time to resolve, get back to 2%. We are determined to stay the course. That's kind of the resounding thesis here of the Fed. They're all in lockstep, kind of all agreeing with that singular statement that we are determined to stay the course, using the phrase that other officials have echoed recently. So that basically, to me, translates into they're going to keep raising these rates.
Yeah.
If they only have to do it by 0.25%, they will. But let's take a look here at the CME futures tool, and you can see this is actually a different tool that we've been using. And this is important to point out, and I'll show you the difference here in just a second. But the prediction for a 4.5 to 4.7 is 94%, which is close to 100% certainty that the FOMC will raise its benchmark interest rates by another 0.25% in February. Looking at this other tool that we've been referencing, it's a little different. It's saying 64%.
I don't know if you're wanting to show this.
Oh, good call. Good call. I've been forgetting to do that, so it's important. But this other tool is showing 64%, while the CME Group.com tool is showing 94%. So a little bit of disagreement there between these tools. I'm not exactly sure what's going on, but this is the one that I would trust more. This is on a second-party website, but I like this one more because you get down here, you get the actual live numbers. This is what the interest rates are across the board for the central banks, including the Bank of Japan here, which you'll notice this little hash mark indicating that's the only remaining negative interest rate in the world, or at least on this list. That's significant. But as you get down, you see, obviously, these are much less significant. All right, let's move on, Tim, unless you had any more thoughts on that.
Yeah, I think it's interesting here. Again, something that's been happening over the last couple of weeks, that we had that article where people are saying 3% the new 2%. But again, it's good to hear from one of the governors of the Fed saying, nope, 2% still the goal. It's going to be interesting. In that article, it talks about how there's a lot of people expecting, and I actually think there's a good chance this happens too. But she's trying to shut this down. I do think we get to the 5.1. I think that Jerome Powell and the Fed they end up giving us either 3 more 25 basis points or even a 50 right after February. I think we get there, but I do think if we can get there quicker, we can go a while, and then in Q4 start the process of shedding some of the interest rates, and we can get a negative 25 basis point hike. But she's implying that that's not what she's expecting.
Yeah.
Again, she's one of the more hawkish on the Fed. But it'll be a very interesting year to continue to watch what the Fed does.
Yeah.
And the other thing I'm excited to watch this year is we know right now the Fed announcement's really crucial for Bitcoin.
It is.
It's very crucial for crypto and all risk assets. I'm going to be very interested to watch if we can this year get Bitcoin more into the realm of gold, to where even if things start getting more crazy with the recession talks and inflation is getting out of control, that potentially Bitcoin can finally be utilized the way it was supposed to be in a fight against inflation, be treated more like a commodity like gold. And maybe that's a part of the reasons why, last thing I'll say here, I think there's a good chance that if that happens, the talk of Bitcoin becoming currency for world, for especially the United States, starts to cool off. But I'm completely okay if Bitcoin is not the future of currency. If it's the future of value, though, and everything is almost like saying, like, hey, what is that in comparison to Bitcoin? I'm completely fine if we use some other crypto or any other type of currency as long as it respects the laws of true value. And again, gold is solid, but it's not what it used to be. Bitcoin can be the new staple of what true value actually looks like. And I think this year we could see some steps in that direction.
Well, as we know, and we can linger here a second, we're a little ahead of schedule. As we know, Bitcoin is the superior currency in terms of the parameters of what a currency is. It is superior in every way to gold and the US dollar. But the US dollar, it has a leg up on Bitcoin in one way and one way only. The US dollar and Bitcoin have dominated gold in these parameters, but the United States still reigns supreme in one way that it's better than Bitcoin, and that's adoption.
Yeah.
At the end of the day, a currency has to be adopted. It has to have the psychological buy-in of a citizenry, or else it's not going to work, right? And Bitcoin, while it is widely adopted, it's adopted by early investors and nerds and people like you and me, this guy and this guy, who sit in a cave and just talk about it all the time, and we love it because we're so interested in it. We see the potential in it, but it's got to get out to the suburban moms. It's got to get out to the kid going down to the corner store to get some ice cream. They've got to start buying in, and maybe it isn't Bitcoin, maybe it's something else. But what is the key to unlock adoption? Regulation. That is really the big thing, and until the government can really get their head around this technology that's extremely difficult to get your head around. How do you regulate something that is almost close to 100% anonymity? Well, you make the exchanges do KYC, but then you can also make your own wallet. You can do things off exchange. So it's difficult to regulate. So it's going to be tough. But I think once the government communicates to the population and to the big banks that run your 401ks and that manage your bank accounts, hey, we are confident that we have adequately regulated crypto, that's when you get big adoption, big buy-in. So that's at least my perspective.
Yeah, and so Matt C just commented here in chat, one of our moderators. He said, I wonder how Bitcoin can be a long-term value play with so much volatility every 4 years still. And that's a true statement right there. But I think that even right there at the end, still, the 4 years still. And I'm a big fan of this still applying the 4-year cycle. But guess what? Every single person who has ever talked about the 4-year cycle understands and agrees with. There will be a day where the 4-year cycle stops. What Bitcoin has gone through in phases, just even let's back up and remember what Bitcoin's had to go through. It went through the ignoring stage. Like nobody even knew what Bitcoin was. The few that did, a bunch of nerds knew what it was, but like the people who were in government and the people who had power kind of shook their head at it. They just ignored it. Then it moved to the stage where it got laughed at. So this, around 2013 to 2017 or so, it kind of started getting laughed at. I guess 2018, 2019. Started getting laughed at. People were like, oh, Bitcoin, that's that fake internet money that a lot of, millions of people utilize. I think it's great, yada, yada, yada. We have moved into the phase where people are fighting it. The governments are fighting it. We're in the fighting stage. But that is the stage before the legitimacy, and that will be what stops the 4-year cycle. The respect, actually, that Bitcoin has from government officials and worldwide leaders, the fact that they're fighting it, shows you how strong Bitcoin actually is. So do we have maybe one more 4-year cycle left in us? Maybe. I think there's a chance that it could be over. This could be the last regrouping of it. But there's still a chance we have one more. But watch as we move in towards closer to 2025, which should be the peak of the next bull market. 2025, 2026, 2027. Watch potentially that we don't get that 75 to 80% dip that most bear markets get. Maybe we only go down 30 to 40%, but that is the bottom, and it's painful because people are using it as a store of value.
Yeah.
I think that, Matt, you raised a great question that right now with its volatility, it cannot be seen as a legitimate store of value. But as we get through the fighting stage and we move into the regulatory stage and we move into the mass adoption and we move in towards these companies using it as their value, they do not like to lose. Like they're willing to dip 30, 40% and regroup more. When institutions are adopted into Bitcoin, when they're using Bitcoin and holding it as a store of value, they will not want to see 85% dips anymore. And that will be the end of the 4-year cycle the way we know it. Good question, good thought there. And again, no firm answer, but that's what we're kind of exploring right now. Is this the last 4-year cycle? And there's a lot of evidence to say yes.
Yeah. Well, and then the other thing I would point out is like take a look at the Dixie. Like it has volatility too. But over 17 years, the most volatile point, and this is only going back to 1968, but the most volatile point only saw a 56% movement from up to down, and that's not that much compared to Bitcoin in 2 years, right? So in order to be a fully adopted currency, you will need to be a lot less volatile. But that's the thing is like those things tend to happen simultaneously. As it becomes adopted, it becomes less volatile.
Yes,
those are causal relationships. You just have to take that first step. Yeah. And the early adopters, the nerds, we've taken that first step, and we just need, again, the suburban housewives and all the kids out there with their Fortnite bucks and everything to get into crypto.
And that's just one more reason why I understand the desire and the interest in having the lowest price possible. And I'm going to read Matt's, he responded here in just a second, so I'm going to read that in a second. I understand this, but when you think of long term, there will be a time where we will never see levels like this ever again. I'm not ready to say that just yet. I think that there's still a lot that could happen here in the next couple of years that we end up still seeing low levels. But there will become a point where it's like, man, we will cross 100,000 and we'll never see a $100,000 price for Bitcoin ever again, being that the supply is so little and the adoption is growing so massively and the demand is growing so massively, it just will never be able to get back down to those levels. So it's all the more reason why I'm not picky about picking up my Bitcoin, whether it be 20,000 or 17,000 or 22,000, because I know when I'm looking back here in 20 years, I'm going to be glad that I purchased it below 69,000, below 100,000, below 200,000. Matt, let's see here. I want to read what he says here because he says, respectfully disagree. I always love when people disagree. Matt says, I'm going to respectfully disagree with you for now. Until we actually see the 4-year cycle broken, you have to assume it is still in play. No, I mean, I don't think you actually do disagree, Matt. I didn't say that it's definitely over. I agree with you. We have to see it play out. What I'm saying is there are certain signs that this could be the last one. But by the way, when I say the last cycle, that would take us all the way back up to a new all-time high, which means that we have another 3 years left in this 4-year cycle that I think could complete that 3 years, 2 years, 2 years left to 2025. I think that in 2025 is when we're starting to see potentially a brand new thing happen. That concept of every 4 years dipping like 70 to 80%, cleaning house and then going, I think that's when we're over. So we'll see. It's anyone's game. And for all we know, there's a lot of pushback and Bitcoin stays in the same boat. Again, the reason I think it's different this time is because we're not in the ignoring or laughing stage anymore. We are in the regulatory, they're fighting it stage. And that is what's bringing it legitimacy and respect like it's never had before.
Yeah, absolutely. Well, these type of long-winded, more nuanced conversations are exactly what you can expect from the Patreon once we launch that. And guys, I can tentatively pencil in that we'll be doing a launch on Monday, more than likely, unless something catastrophic is revealed about the system over the weekend. I don't see a reason why we wouldn't launch that Monday. But speaking of which, we'll move out of our long-winded segment and back into finishing up these stories, of which we won't go into too much detail because of the time left on the clock. But we did want to mention these as they are important. You saw that big gap up today in Google's price. That is because of this. Google's parent company to lay off 12,000 employees. When you shed costs, your stock price goes up. And then also Genesis has officially filed for bankruptcy protection. And these are some of the dollar amounts that they still owe their creditors. Mirana Ventures Investment Company, they owe $151 million collateralized. They owe Decentraland $55 million, and they owe Stellar $13 million. It also wasn't mentioned, even though it was in the title, but they also owe Van Eyck and probably several million. And then Gemini, I know they owe $900 million, or at least that's what Cameron Winklevoss alleges. So other than that, those are going to be our stories, and I got those through a lot quicker than I thought I was going to. There is one more I didn't want to let fall through the cracks here. Nexo settles with the SEC and will pay $45 million and kill crypto lending product. So that's been an important story I've seen in the headlines. Don't know a ton of the details with that one, but certainly something to keep up with.
Man, boom.
Could be precedent setting.
Well, that is going to be about it for today's show. There was a super chat that I saw way earlier that we did not get back to, so I'm going to scroll. Hopefully I can still find it here. Yeah, Cryptex says super chats are flying today. Smash the like buttons. Thank you so much, Cryptex. Again, he's going to, as we launch that Patreon, speaking of, we just got another one from Matt C as well. As we launch that Patreon and get that Discord going, which is phenomenal, by the way, going to be amazing. Cryptex was super, super crucial to getting that Discord built. So massive respect and shout out to him. Make sure when you guys do get in there and you see it, you give him a shout out and thank him for the organization and attention to detail he put into what gets going there. But again, we just had one from Matt C come in for $20. Thank you so much, Matt. Saying thanks for another great week, Tim and T-Shroom. Treat yourself to a few pineapple pizzas.
Yes, we will.
Yeah, that's a good idea. And I want to remind you guys, this was another great day for Super Chats. Thank you to every single one of you guys that give. And we're going to be updating you guys on what's happening here because remember, 20% of everything, Super Chats, Discord, the Patreon stuff, when we in the future maybe sell merch and do like courses and stuff, 20% will always be going back out to charity, and we're going to be completely 100% transparent with you guys about that. So thank you to all of you guys who support in whatever way you can. If you have not already, go ahead and smash that like button as we head out today on Friday. I did just find out, this is an important announcement, I will be missing the show Monday. For work, I have to actually take a day where I'm in the office the entire day. So it will be T-Shroom running the show on Monday, and we'll see. Maybe we'll have a special guest. Maybe Smay wants to join.
Maybe we'll get Smay on.
I can't promise that, though. You never know. He says he struggles to wake up this early. But
I can wake him up. I got a couple squirt guns.
You got a way to do it?
I got a squirt gun and an air horn.
Well, guys, I love
and a drill sergeant I could rent.
I love all of you guys. I will not be seeing you Monday, but I will see you guys on Tuesday next week. With that said, though, you guys have a amazing, fantastic, phenomenal, jubilant, great. What are some other words we can throw in there? Stupendous, awesome. I already said awesome, but stupendous weekend. We love you guys. See ya.